It's just different.
Yo, what is good? What is going on? Aces Unlimited YouTube family. Hopefully you guys are doing absolutely blessed today. I'm super excited because I haven't really done a video in a while on YouTube, and honestly I've just been busy setting everything up with Aces, but I'm excited to now be announcing a segment we're going to be doing every single week called our Trade of the Week. We're going to be going through trades that were sent out to our members in our VIP group chat. So for those of you guys that want to actually learn, why we take the trades that we do and what we look for when we approach the market, this is going to be a perfect video for you guys to find some high risk to reward trades, some examples that really worked out exactly how we like to see them, right? So what we're going to be talking about today is a US30 buy that was sent out on Sunday, September 5th. We were risking about 1% of our account to gain a full 7% gain on this trade. In other words, if you risked $10 on this trade, you would have gained $70. If you risked $100 on this trade, you would have gained $700, right? So 7 times whatever your risk is, you would have had from copying and pasting this position, right? Or if you caught it yourself from simply using the education that we have on our YouTube channel, as well as we have with our members as well. So without further ado, let's get into the charts and talk a bit about this trade. See you guys on the other side. What is good, y'all? What is going on? So we're about to break down this US30 buy, which was our trade of the week, for about a 1-to-7 risk to reward ratio. All right. So pretty much with this position, what we pretty much looked at was about the 1 hour time frame down, right? This was actually more of a day trade, right? It was something that we actually only held for 1 day. And we're going to show you guys a bit about, what we were looking at in terms of liquidity, in terms of structure. All right. So the first thing that we want to look at is market structure. So for those of you guys that have experienced trading, as you guys know, when it comes to the market, there's, basically different trends that happen, right? Downtrends and uptrends. Now with uptrends, right, what we end up seeing happening in the market is we see higher highs and higher lows being created, right? So if we look at before we were, when we were looking at US30, at the time of when we were looking to take this trade, if we look at the higher time frame here on the 1 hour, right, we can see that clearly we're making higher highs and higher lows, right? So let me get my path here. So what we end up having is we have this high to this low, right? We have this higher high creating a higher low, right, to then create a new higher high, right? So far this is the structure that we have on the 1 hour time frame. Okay, so now let's head down to the 30-minute, right, and look at some of the liquidity runs that have happened on US30, right? So what we end up seeing is within these areas where there are significant structure, right? So as we can see, this low creates a new high, right? What we end up seeing is we see liquidity getting taken out of the market, right? So if you guys want to learn more about this, I'll definitely link this in the video. Our intro to liquidity video is a good one for you guys to understand what is really happening here in the market, right? But in the market, things like equal lows and equal highs are normally targeted, and they're normally taken out of the market before the market will change direction, right? Because basically what ends up happening is that the average person, or even some institutions, will look at this, right, and they'll look at this as a form of support, right? They'll see this, oh, price keeps bouncing off from this area, price keeps bouncing off from this area. This is an area where people will want to buy from, right? Because they'll start to think that, okay, if we're going to continue to go bullish, right, if we're going to continue to go up, then we're going to want to see these, this support get respected, right? If we go through, then they think it's going to go, all the way down, right? But really what the banks and institutions end up doing is they end up taking out these lows before continuing in the direction of price, right? And, they end up taking not just equal lows, right, but it can be other things like, what we see here, right? So let's kind of look at the institutional order flow that's going on here. So first, right, we look at this low that creates this high, right? And we can see that this is really the last push down before we have this massive move to the upside here in the 30-minute, right? So we have like a massive push to the downside that sweeps through these lows, right? So we can see here that these lows here got taken out with this one move to the downside. From there, we see a break above in terms of structure, right? We end up creating equal lows here that later on end up getting taken out, right? And then we continue to make higher highs, right? So from there, right, what we understand is that when we're looking to trade within supply and demand levels, right, we want to see price react from these areas, right, trade away, break structure, and then retest back on lower time frames, right? That's exactly what we want to see happen in the market. So what we see happen here is on the higher time frame on the 30-minute, right, we have this one candle, right, taking out these equal lows, right, taking out these equal lows and returning back into an area where previously we had lows getting swept, right, that led to a break in structure, right? And this low ends up creating a new high, right? Meaning that this is now the new manipulation, right, that creates the new higher high where we should be seeing reactions, okay? So this is the context now on the higher time frame. So let's head down a little bit to the 10-minute. So on the 10-minute time frame, we again see this area, right, that takes out these lows, that continues to create new highs, right? And we see equal lows being left behind here. So after we end up having a reaction, right, after taking out these equal highs here, we end up having a big push down to the downside. We can see how fast this flash crash really was, right? Hundreds of pips that just went, right? What is this? 200 pips, right? 200 pips that really US30 just fell, right? To, you know, take out these lows, right? So anybody who's buying here got taken out of the market, right? So this is exactly what we look for. We look for equal lows to get swept, right? And then we look for breaks of structure, okay, to then confirm that on the lower time frames, right? So here we return back into a significant area of 1 hour structure, right? Again, a low that created a new high. It's also an area where we took out equal lows, right, here and here, and we also returned back into an area of manipulation that also had created a new higher high, right? So now what we want to see is we want to see reactions from here, breaks of structure, and then retest to then confirm our trade, right? So rather than just buying as soon as we get into this zone, right, what we can do is we can wait for reactions on the lower time frame. So I'm going to delete this so we can see this better. But this is actually a 1 minute time frame trade that was taken, which allowed us to have a much smaller stop loss. So if we look at what happened here in terms of structure, we can see that this high created this new lower low, right? So here we have this low creating this high, which then creates a new lower low, right? And what again do we see happen in the market? Well, we see first a very tight range, right? Continuously taking out lows, right? While highs are really being left intact. We can see equal highs here, right? Being left intact, meaning there's liquidity to the upside, right? So people who are selling are still in the market, right? But people who are buying are consistently getting taken out here, right? Wicks getting taken out, right? More wicks taking people out, right? Until finally we see price take out these lows, right? So we can see here a few touches of the same area within this few pip range where people have the opportunity to enter into buys, okay? And what ends up happening right before we turn around, those lows end up getting swept, right? These people end up getting taken out of the market and we end up shifting through structure, right? So what we want to wait for is we want to wait for the high that takes out the low to get taken out, right? So here we see we have a new high being created in the market, right? So we have a new path now being created. So let's look at, you know, in terms of what we're seeing. So now we have this high that created this low, right? Oh my bad, that went away. So we have this high that created this low, right? We end up creating a new higher high, right? And meaning that overall in the market, we'd be expecting, you know, a shift in direction, right? Based off of the lower time frame. So what we end up seeing from here is we see two things happening. Well, first and foremost, we see equal lows being created, right? So buyers are being introduced into the market around here, right? Then we see equal highs being left behind within this area, right? And if we continue to let price play out, we can see more equal highs being created here. We can see double top being created right there, right? So sellers are being introduced into the market, right? So now we're starting to sweep through this low here, right? All these equal lows, we're starting to sweep through this low as well, right? And as soon as we start to see that, we actually see what we call a Wyckoff schematic being created in the market, right? So actually, my bad, I want to talk a bit more about this area where we actually took out the lows, right? So a few things about this price action that we like is first and foremost, we like that we have one clean candle taking out the lows, right? And then rejecting from there, right? With a big impulse. So we can see one clean candle taking out all those equal lows, right? We see a new high being created, all right? And we also see imbalance being left behind, right? So what is imbalance in the market? Well, imbalance is basically where price is moving so quickly, right? Because there's so much buying happening in the market. So how can this be caused, right? This can be caused by massive institutions entering into big positions in the market. And this is what really, you know, makes the candles look like this, right? And we can see imbalance continuously being created here as well. And, you know, we'll have another video as well that will be created on imbalance for sure for educational purposes for y'all. But what we'd really expect is we'd expect price to then continue to come back and mitigate from the position where these equal lows were getting taken out. Because as we can see, price never came back into here, right? So that's what we'd be expecting to happen before we create any new highs, right? And that's literally what ended up happening in the market. So after we start sweeping through these lows, we start to see a Wyckoff schematic play out, right? We have our PSY, selling climax, right? We have our automatic reaction, a quick move to the upside, right? We have our secondary test, and again, we have equal lows being created here. So now buyers are being induced into the market, right? But what ends up happening? All those buyers get taken out right here, where we have now our ST and phase B, right? And we create more equal lows. And at this point, we've already entered into the market, right? We see that we're now back into this 1 minute candle, right? That created this new higher high, right? So the expectation is from now is for us to continue with those higher highs and higher lows. So for us, we want to create a higher low to then create a new higher high, right? Again, taking out areas of liquidity that were left behind, right? This being our first target, right? Which is these equal highs that were left behind, and our second target being these equal highs that were left behind. Because again, sellers have not been taken out of the market, right? And the market will impulsively look to take out those highs, those equal highs and equal lows, where sellers and buyers will enter into the market, right? Just like how here, all these equal lows got taken out, right? Just like here, all these equal lows got taken out. Just like on the higher time frame, right? In the 30 minute, where we have equal lows here getting taken out, equal lows here getting taken out, equal lows here getting taken out, right? Equal highs here getting taken out before moves to the downside, right? This happens all the time. So anyways, we'll continue to go into the lower time frame here. So what we see here from price action, right now, we've already entered into the market. We entered in at around 8:16 p.m. This is when we sent out our trade, and we can see these equal highs being created, right? We have, sorry, equal lows being created. We have one last sweep of those lows, right? We take out these equal lows. We have our spring, which is on our Wyckoff schematic. We have our test, right? Which comes back, fills in imbalance, sweeps through lows, right? And then we have our massive impulse to the upside now, right? So from here, we just let price go, right? Literally, we just have our first target hit here for our TP1, which is, again, these equal highs, which are targeted. First, obviously, we have the rest of our Wyckoff schematic being played out, right? So this is our signs of strength, right? And this is our LPSY. We can also see equal lows being swept here, right? And from there, this is really our last low before we start creating more highs, right? So let me head into the 5 minute so we can get through this a little bit quicker, right? But as we can see, we sweep through equal lows here on the 5 minute, right? We retest, and then we just continue to go higher, right? So far now, right, we've already hit a 5% gain, right? From the time that we entered, how long has it been? Let's see from here. So here to here, it's been around 8 hours, right? So not even a full day yet before we've already hit a 5% gain on this trade. And again, our final target being the 7% gain, coming back into the area where we took out equal highs, right? So that should be hit any minute now. There we go. So TP3 getting hit there, right? Meaning that now if you risked 1% on this trade, right? Meaning you risked 1% across this box, right? Across these 26 movements to gain 185 movements, right? You would have hit around a 1 to 7 risk to reward, meaning that copy and pasting this trade, risking $10, $700 gain, sorry, $10, $70 gain, $100, $700 gain, $1,000, $7,000 gain, and so on and so forth, right? And from here, right, we see price reverse, right? And this is why we have our TPs at areas where price can reverse at, right? And this ends up becoming an overall distribution where we now break through structure. So if we look at the 1 hour time frame, there's actually a very interesting area where we could have took an entry, right? So we can see this is our last push to the upside before we create new lows, right? So if we had our entry here, stop above the area of structure where we'd be looking to create, a new lower high, right? So this is our area there, right? We can literally see how far down this went. Like it literally took a massive dump for US30 after that buy that we hit on Sunday, right? So from there, boom, literally taken out, right? And it's the same concept, right? Here we see equal highs being swept, right? We see the retest, and then we continue to the downside, right? So that's what this accumulation was really meant for. It was meant for the institutions to bring price back to the upside, so they can bring price back to where we previously took out equal highs, mitigate their sells, right? So this is exactly what this institutional move ended up doing, right? On the 1 minute, so on the higher time frame, this distribution could be completed, right? And then we have this test, and now we continue to have new lows, right? And now we're entering into new reactive zones. We'll see what happens next week. But here we can see even these highs being swept before having new lows being created, right? Everything makes sense here on the higher time frame in terms of structure, right? So here we have our high that creates this low, we have our high that creates a new lower low, and then here we would expect a new lower low to be created, right? So potentially we can even see new lows coming back into this area of imbalance, coming back into, you know, this area where we took out lows before. We can see here equal lows being swept with this move, right? So we can easily return back into here, which is honestly what I'm expecting from US30, but we'll see what ends up happening, right? We do end up having a shift in structure, and we end up pushing above this level where we previously had these sells. Then in that case, right, we can look for that. But regardless, you know, that's pretty much everything that I wanted to go through for you guys on this trade of the week, right? It shows you guys how you can go from the 30 minute to the 1 hour, from the 1 hour to the 1 minute, and find these types of trades, right? Find trades that make sense in terms of structure, right? Again, we're reacting from an area where previously we created a new high. And even though we failed to create a new higher high, right, we still had all the signs here that we needed in terms of accumulation previously, right? In terms of lower time frame structure, again, previously we had accumulation in these areas, right? And we'd expect price to come back and retest into those areas to then create new higher highs, right? So this is how you can find trades set up just like these ones, right? For buys or sells, where you guys can find some high risk to reward trades, some high risk to reward setups literally every single week, right? So that's pretty much that, guys. Hopefully you guys enjoyed this educational breakdown for this US30 buy. And hopefully you guys will find some good trades this week as well. You already know in the VIP group chat, we'll be sending out all the trades that we'll be finding, as well as we'll be having our live sessions every single morning for New York from Monday to Friday at 9 a.m. to 12. So if you guys are interested even in hearing a little bit more about the ACES program that we have going on, make sure you guys head over to our website at acesunlimited.net and go ahead and fill out our contact form. And one of our traders will definitely be in contact with you to get you started within our platform. So happy trading, guys, and I'll see you guys on the next video for the next trade of the week, and potentially more educational content we'll be doing over the week. So I'll see you guys then. Take it easy. Bye-bye.